Welcome to The Explainer. Today, we're digging into a really sharp analysis of one of the market's hottest, and let's be honest, most controversial, AI stocks, Palantir. The argument is simple. Its incredible rise might be setting the stage for an equally incredible fall.
The author, Tony Hicks, just nails it with this opening metaphor, doesn't he? It perfectly captures that dazzling, almost hypnotic feeling of watching Palantir's stock climb. It's beautiful, it's bright, but you can't ignore gravity forever. What goes up? Well, you know the rest.
So, let's start with the good stuff, the hype. Because look, to really get the risk here, you first have to understand why everyone is so incredibly excited. And the performance has been, there's no other word for it, explosive.
Just look at this number. The stock went on an absolute tear, soaring an incredible 340% in 2024 alone. That's not just good growth. The author calls it a rocket booster strapped to another rocket booster. And it didn't stop there. The momentum just kept rolling into 2025, tacking on another 130% on top of that. You can almost hear the crowd cheering, can't you?
Now, this isn't just wishful thinking. There are some real numbers fueling this rocket. The company is pulling in serious revenue, and its year-over-year growth is massive. But here's the kicker. That 200% jump in its U.S. commercial business, that's the part of the story that says Palantir is more than just a government contractor.
Okay, but here's where the story takes a turn. This is the point where the author's alarm bells start going off, loud and clear. The argument is that the story has just become so good. The price has left the planet.
And this is really the heart of the analysis. The narrative, the AI everywhere story, has become so intoxicating that investors are paying a price that seems completely disconnected from the actual business underneath. And to see what that means, just put Palantir's valuation next to giants like Alphabet or Meta. It's like they're not even playing the same sport. It's in a league of its own, and maybe a dangerously overinflated one.
In fact, some analysts are talking about a valuation as high as 800 times forward earnings. Think about that. A number like that isn't just a bet on success. It's a bet on pure, flawless, uninterrupted perfection. Forever. And in the real world, perfection is usually a fantasy. So if the price tag is that outrageous, what's wrong with the picture? Well, according to this analysis, if you look past the shiny surface, there are some pretty big risks that the market seems to be happily ignoring.
For one thing, the pros are getting edgy. While retail investors are all in, you have seasoned analysts raising red flags. Morgan Stanley says underweight. The Motley Fool is talking about a potential 60% plunge. These are serious warnings.
And this all starts to feel a bit familiar, doesn't it? It's like we've seen this movie before. The dot-com bubble, the 3D printing craze, the blockchain frenzy. In every case, the tech was real, but that didn't stop the hype from creating a bubble that eventually had to pop. And this gets to the real crux of it. Palantir is a real company, for sure, but it also faces very real-world challenges. It's still heavily tied to government contracts, it's in a brutal arms race for AI talent, and its business is super sensitive to political winds and ethical debates. These are all headwinds that sky-high price tag seems to be completely ignoring. So this brings us to this really fascinating human element in the story. It's this wild contrast between what the crowd is doing and what the guy running the company is doing.
On one side, you've got the retail army, the meme stock crowd on places like Reddit, cheering it on, convinced it's going to the moon. Their enthusiasm is infectious, and it's powerful.
But then you look at the other side. You look at the ship's own captain, CEO Alex Karp. While the crowd is buying with both hands, he's been selling. We're talking nearly $2 billion worth in 2024, and he's planning to sell more. They say when the captain starts quietly heading for the lifeboats, maybe you should pay attention. So what in the world does this all mean for you watching this unfold? What's the big takeaway here? Well, it all boils down to one question. What game are you actually playing? The author really urges you to be honest with yourself about this. Are you investing in Palantir, the business, believing its real value will eventually catch up to its price? Or are you just speculating on the stock price, betting that it'll keep going up just because because it's been going up.
Now, for anyone still drawn in by the story, the analysis lays out what it calls a smart money playbook. And the key isn't about going all in or trying to perfectly time the top. It's all about managing your risk. Maybe using staged entries, taking some profits while it's climbing, and, this is the big one, having a clear exit plan before the music stops.
And that leaves us with this final, provocative thought. Look, history shows us that bubbles can always get bigger. This stock could absolutely keep running. But the higher it goes without a reality check, the further it has to fall. The warning here is pretty simple. If you're going to play with fire, you'd better respect just how badly you can get burned.